The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Welcome to Winning in Retirement. I'm your host, Brian Akers, president and founder of Akers Financial Group. Here with me today is vice president of Akers Financial Group, Jeff Akers. He's a certified financial planner practitioner, just like I am.
Indeed.
I did not hire you on Indeed.
No.
I hired you because you are related to my father. And then he also is talented and skilled and all that. All right, so welcome to our show. We've been putting together a show that we want you to sit back and listen to. It's going to be real simple. Hey, do you need life insurance?
That's a really important question.
Right. Well, do you need life insurance? And the answer is it always yes, Jeff?
No, it's not always
Don't
yes.
tell the answer, Jeff.
Oh, well.
How are they going to stay the whole time and listen?
Because they want to know whether they're on the yes side or the no side.
All right. So answer your question. Answer it again. Do you need life? Not you, just in general you, not
In
Jeff.
general, right.
Do you or we the all need life insurance?
Maybe.
Okay.
Is that better?
Find out more on Winning in Retirement.
There we go.
All right, so this radio podcast put on by Akers Financial Group. We are financial advisors, and we have offices in Lutherville and Varstil. What we try to do through all this is really, truly sit down and talk with you about your planning, do what we need to do. But one of our key ingredients is this. We need to make sure our plan is for the worst case scenario is handled.
Yep.
And then we want to enjoy and invest and do that as if we might live forever.
Right. You know, one of the first things I go through with folks when I first meet them is kind of a hierarchy of financial planning. And the first step in the financial planning process is about protecting the family. Absolutely.
That first thing is insurance. Do we need insurance? So we love the concept of why? Why would you need insurance? And then we figure out, does it fit? And if you do need insurance, let's buy the right kind. So this show is going to be trying to explain the basics of what life insurance is and going from there. All right, Jeff, I'm just going to ask a crazy question.
Okay.
What's life insurance?
Well, in simplest terms, it's something that you buy so that when you die, your beneficiaries get money.
Yeah,
That's
so
kind of the simplest form.
It's like a trade-off. Someone says to you, hey, if you pass away this year, I'll give your family $1 million.
Right.
And all you got to do is give me, say, $2,000.
Right.
And if you die this year, I'll give your family $1 million. It's tax-free. And,
right.
then basically you say, do you want to make that? It's almost like a bet, right?
Right. Do you want to make that deal? Yes or no? Yeah. Now, that's only 1 year at a time.
Yeah.
We can do it more than for 1 year at a time. We can do
Absolutely.
It for long periods.
So what I described is something called term insurance. Term insurance is where you buy something for a term. And that quick little example was a 1 year term, which we can't really buy, right?
Right. Yeah, I don't know of anyone that offers that because that's kind of dangerous.
Well, it's sort of annual renewable term where your price goes up every year.
And, sure.
And that's really not, most people don't buy that anymore, do they?
You could buy term insurance for a longer period, but once you stop paying the premium, the insurance goes away.
I'm sorry, I got to go off subject for a second.
Okay.
What hit my brain was this. Life insurance, for marketing purposes, they call it all kinds of things. All kinds of things they call it. They might call it mortgage protection, mortgage insurance. And the thing is this, all of that is usually term insurance. It's just a matter of price.
Price and duration.
And duration meaning number of years you lock in a guarantee. Is that correct, Jeff?
Yes, that is correct.
All right. So let me give an example. Somebody's 30 years old, 2 kids, wife, 1 dog, 1 cat, picket fence, life insurance need. How much do they need?
Well, it comes down to purpose. So
I don't want a whole calculation.
No, but the first purpose, or actually the second purpose I think about, is debt and mortgage.
Absolutely.
So how much is the mortgage? That's the first answer to how much life insurance you need.
Absolutely. Because what happens is this. We basically are buying life insurance on someone, and then we are looking at if they die tomorrow, what is the financial need for that family to stay the same status quo, the same house, the same ability to pay their bills, the same schools, the same goals, how much money. Now, old school financial planning might say 10 times your income is a good number. especially when you have a larger family.
Right.
Or even more, depending on how much debt you have.
And what you're going to use it for.
Yeah.
But just going back to your example of the husband and wife and the mortgage.
One dog, one cat. Yeah.
Yeah, one dog, one cat, 2 kids. I don't really, well, I'm not a pet guy, but we'll leave that alone. So,
so there's no insurance need for the dog and cat.
No, if everyone passes away, the dog.
You obviously have never paid for pet food.
That's true. That's true.
And then the dog's needs of specialized food.
But even between that husband and wife, the life insurance need isn't necessarily the same. If the husband works and the wife stays at home with the kids, well, if he passes away, they're not going to be able to pay the mortgage anymore. So you've got to have enough to pay the mortgage if he were to pass away.
But if she passes away, he can't afford.
He's got to pay for daycare now.
Daycare, everything.
Expenses.
It's a lot more value than people ever think.
Right. It's more than you would expect, but it's not necessarily equal.
It's getting close, though.
It does close in.
When you start, daycare for somebody under 2 years old is a lot of money.
Yes, it is.
A lot of money. And that's, just put it that way. So life insurance is something that pays a death benefit when you pass away. Now, some life insurance might be accidental death. It might be for a certain purpose, a certain reason. If you die based on this, then they'd pay. We do not recommend any of that. It should simply say, you passed away.
Right.
We pay the death benefit claim.
Yeah, I don't think...
Keep it simple.
I don't think anything that says you have to die this way is really life insurance. That's the accidental death company.
Yeah, and they check the boxes a lot when they're sort of upselling you, and they put these add-ons, and especially through work.
It's cheap.
It's cheap, but it's a waste of money.
Right.
Unless you have an accident.
Right.
And you die, and the death certificate says accident.
Right.
Which I think we've had one in my career. Maybe two.
It just doesn't happen very often. So
it doesn't happen very often where someone has checked the box and had an accident.
Right.
Yeah.
Right.
All right. So the idea is this. I've been going off the script a little bit, but life insurance comes in different versions. Term insurance is the easiest one to understand. We are buying for a period of time, a death benefit. You, the person who's being the insured, is basically saying to the insurance company, hey, I think I might die in this year. Here's my money. And then they say, yes, we'll take that action. And then they guarantee you a death benefit.
Or at least I want to protect against me dying during this period of time.
Oh, you don't like my example?
Yeah, I don't like saying I think I might die during this time. I'd rather say just in case. I just want to protect my family, just in case.
That's a kinder way of putting it. So term insurance would be considered a pure charge for death benefit. There's no extras, no bells and whistles, no... like if you go out and order pizza, you ever order pizza, Jeff?
Oh, yeah.
Do you get toppings?
Yes.
What toppings do you buy?
I like pepperoni, mushroom, sausage, all kinds of stuff.
Do you order that as a package, like the meat lovers, or do you order it one at a time?
Usually I do the package.
Because it's cheaper.
Right. You get a discount for that.
That's what I thought you would do. All right. So the hardest part is sometimes my wife and I order pizza, cut in half. I get my certain thing. She gets her pineapple on her side.
I just get 2 pizzas.
Well, that's you spending more money than I thought. But the idea is that the toppings cost extra money.
Yep.
So anytime we talk about life insurance and you're adding other benefits, other guarantees, taking that term to make it last as long as you do, that's more permanent life insurance.
Okay.
Permanent life insurance costs more money.
Yes, it does, because it's permanent.
All right, so let's talk about the basic long-term, and since the 70s, even before that, that the whole life has been a type of policy that's out there. It's still out there today. Yep. Explain the basics of whole life.
So all of the permanent policies have a cash value. Term insurance that we just talked about does not have any cash value. So in whole life, everything is guaranteed. You're guaranteed to pay a certain amount per year. It's guaranteed to be a certain cash value at certain stages, every stage, as long as you pay those premiums. And you've got a guaranteed death benefit. Mm-hmm. There's a guaranteed interest rate on that cash value. Mm-hmm. Everything is locked in whole life. It encompasses everything.
And depending on the design of the company, what you might have is interest on the policy, and then also dividends.
Right.
If it's depending on if it's designed as a stock company, you would not get it. If it's a mutual company, there's a dividend that could be added to inside of there, and generally the whole life would then have a pretty good growth rate for on the conservative side.
Yeah, just so you know, a mutual company means that if you own a life insurance policy, you own part of that company, that insurance company.
And that's the way they all used to be.
Right.
And most of them are not anymore.
Yeah, now there's stock companies where there's stockholders that own the company and you just have a policy from them.
Yeah, so basically dividends in an insurance company is the return of an overcharge of premium, which is profit.
Wow.
How about that one?
Yeah, so you're getting some profit back on your own premium.
Yes. So depending on your age, whole life could cost 4 to 6 times what term would cost. So if term costs $2,000 a year, you'd be paying $8,000 a year for whole life. But whole life means guaranteed for your whole life.
Right. Everything's guaranteed. You're buying. You're not renting.
If you buy the policy at a set premium for life, the numbers are projected out at a guaranteed level. You pay that premium, you get the coverage. No matter what age you are when you pass away, the money will be, the death benefit will be there.
Right. The death benefit goes to your beneficiary. So that's whole life.
That's whole life. And then in the 80s, they started changing because interest rates were going up in the early 80s. And so whole life couldn't compete with higher interest rates. So they designed what kind of policies, Jeff?
It's called universal life.
Universal life. What's different between universal life and whole life?
So the one difference is that the interest that you earn on that cash value can vary. It can go up and down. They also have something called a flexible premium. Mm-hmm. So you could pay more or less. It's not locked in for the entire life of the policy.
Yeah, so in the high interest rates of the 80s, they designed policies with 12%, even higher interest rates on universal life policies, set a premium based on that, which was low, because if your money's making 12 or so, you don't need to put that much money in.
Right.
As interest rate lowered, universal life policies sort of imploded and did not do well.
Yeah, they start sending you letters saying, hey, you need to send in more premium because you didn't earn enough interest in the policy.
Yeah, we're flying through this quarter here, Jeff. We've gotten so far just term, whole life, and a little bit about universal life. We have so much more to talk about.
Yes, we do.
Our show today is called Do You Need Life Insurance? Jeff and I are really going to dive deep and try to explain to you what they are, why you need it, how it works, how it's tax-free, why to have it, or maybe why not. Because Jeff gave us the answer of maybe. Now, Akers Financial Group, we're local. We're independent. We don't report to a big company on Wall Street. We report to you. We do have offices in Lutherville and Forest Hill, clients all around the Mid-Atlantic region, even some all around the country and a few around the world. It's so easy to begin winning in retirement. Just give us a call and schedule your free meeting with one of our team of advisors. Call 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person meeting. Go to AkersFinancialGroup.com or call us at 833-946-7384 to start planning for your retirement now. What is the smartphone of financial tools? We will explain in a moment.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Indeed. Welcome back to Winning in Retirement. I'm Brian Akers from Akers Financial Group. Here with me today is Jeff Akers. We are both certified financial planner practitioners, financial advisors through Akers Financial Group. All right, Jeff, second quarter.
All right.
Now, I have a hard question for you, and that is this. What is a smartphone of financial tools, and what does that have to do with our show?
Well, I'm just going to talk about the whole phone thing for a second.
Oh, yeah.
I remember when I was a kid that I had a phone on the wall with a cord, and if I wanted to call someone, I'd call their number, I had to remember their number, and I'd call that number, and then they had to be near their phone at home with a cord attached to it, and we could talk.
Yeah.
And that was a phone.
Can I tell you mine?
Okay.
All right. I was dating a girl who became my wife.
Yeah, I remember.
From my house.
Yeah.
It was long distance.
Yes, it was.
So I'd have to drive to your house or grandmother's house or a payphone.
Or you'd call me.
Yep. Yeah. And then you call her. Yeah. Just so that we wouldn't pay the long distance charges.
I talked longer to her than I did to you.
Well, she's nice.
She is.
All right. Sorry.
You chose well.
All right, so back to the smartphone example.
Yeah, so that's an old phone. All you people under 30, maybe even under 40, you're like, what the heck are they talking about?
Yeah.
But it existed. You can see a phone in a museum somewhere. Well, now we carry around these phones in our pockets, and we can call people, but I don't know anybody's number because I just flip through to their name and do the call.
You flip? We don't flip on phones anymore.
I flip.
How old are you, Jeff?
I screen. Okay. All right. So I say call Brian Akers,
and it
just calls Brian. And
that's how we do it nowadays.
Yeah. Okay.
Yeah.
Well,
it's the Jetsons.
This is the Jetsons.
Yeah.
But I can also look at my phone, my smartphone, and say, take me to Akers Financial Group, and it'll map how to get to Akers Financial Group. I can say, what is life insurance? And it'll go to the internet and bring up what life insurance is. So we still call it a phone, but it does a whole lot more than what the phone did when I was a kid with that cord attached to it. And it even had a rotary dial where I had to, dial numbers. That's kind of the progression of phones. And then they got so smart that we called them smartphones. And we were just talking this morning with Brian's son, and we're like, well, what do they call it now? And he said, well, we just call it a phone. So we call it the same thing, but it does so much more than it used to do years ago.
All right, I mentioned the Jetsons. Do you remember the Jetsons?
Oh, I remember the Jetsons.
Yeah, so you saw the reruns. That was set for what year in the future? Do you remember?
I don't.
It was set for 2062.
Really?
And so we're like halfway there. The Jetsons were like, or 1962 was original first.
So it was 100 years out.
Yeah, 100 years out, but we're halfway there. And we're doing a lot of stuff. Like the video camera, all those things you said. I just think Jetsons. I think it's pretty fun.
I didn't even mention the camera. Oh, my gosh. How did I forget that?
So the reason we say that is that life insurance can be used for many reasons. Now, some of these reasons are done for marketing purposes and trying to make sales. We want to make sure everyone understands that life insurance should be bought with a purpose and for a reason, and it has to be tied to the advantages of life insurance, and it does not fit everyone.
Nope.
It fits the proper reason. So be very cautious on buying life insurance, thinking that it's going to cover everything like a smartphone.
Right.
It will cover many things and can be used when done properly and designed properly.
It can do more than just provide a death benefit to your beneficiaries, but that's still what it does best.
Right. But inside of a life insurance policy, you're going to have cost of life insurance, and that's called death benefit or mortality charges.
Right.
You're going to have insurance company charges.
Right.
You're going to have taxes inside your policy of about 6%, which then goes to the state that you bought the policy through.
Okay.
And then depending on the design, earlier we talked about term. Right. Then we got into whole life and universal life. We started doing that. And they have different ways of investing the money. Well, there's different fees for that, too.
Yes, there are.
All of that's part of the cost inside a policy, and that's why you have to put more and more money in depending on what you're trying to accomplish.
Right. If it's okay for me to go to the last type of life insurance, it was variable universal life, which introduces another cost to it.
Right, which variable uses mutual fund-like sub-accounts, which has managers in another layer, and then you have to add other fees inside of there too.
Right. Now you've got costs to pay those managers inside as well.
Right. So whenever you're designing or thinking about life insurance, always think about why, what's going on. So right now we've talked about term. Term's like the pure way of buying it. The problem with term is that at a certain period of time it ends.
Right.
So then we give an example of my life. I bought $1 million term when my second child. I bought it for 20 years. So when they were out of college, it would be gone because that was the high years of my life that I had a responsibility to provide for 2 kids. And so that $1 million term came and actually went. I won the fact that I'm still alive,
right? But
I lost because I paid 20 years of premium.
Right. I didn't die.
How do you feel? Did I really lose, Jeff, or was I cautious?
No, I think you were wise.
Okay.
Because you provided for, if you died, the mortgage would be paid off and they could still go to college.
Yeah.
So you put them on a trajectory to have a positive life. but then you lived and you got to do all that stuff anyway.
Right. So hindsight, if I would have gone backwards and say, I'm going to live, I'm going to pay extra. And then the problem with life insurance, you got to see how much can we afford to buy.
Right.
And so sometimes we'll buy what people can afford. We buy some term and we buy some what we call permanent life insurance that'll last a lifetime. And the reasons people could have life insurance during retirement they're many-fold, right, Jeff?
Oh, yeah. Life insurance, when you have a cash value, one of the things you can do is take loans against that policy.
Yep.
It's almost like your home equity loan and you can take it out, except with the life insurance, you can take these loans and not pay them back. As long as the policy still has enough cash in it and it lasts as long as you do, then that money you've taken out as loans is tax-free.
Yeah, they add interest inside and eat away the cash value, which the loan gets paid off upon death. So there are a lot of complexities to that. We got to understand how it works. But that's a way of making life insurance be tax-free. Now, the life insurance investment bucket, that piece can be invested in like whole life invest guaranteed by the insurance company. Universal Life has a portfolio rate that changes. Variable Universal Life has things that have sub-accounts that could be as stock or anything like that.
Right.
And then they came out probably later 90s, Index Universal Life, which is tied to fixed indexes, which has no downside, some of the upside. Then there's other variances of how they invest that money besides that.
Right. They're always creating new ways to make the money inside grow.
And as interest rates lowered the last decade, they had to be more and more creative to make these policies sort of be something
attractive.
that you would want, right?
Right.
Now, life insurance, there's many cases we can talk about the use of life insurance when it comes to delivering a death benefit check and the impact of delivering a death benefit check in a family's life. After a death in the family, to give them a tax-free check and then tell them that they're okay is a very good thing as a financial planner.
You've had that experience.
Well, as a friend of mine and his wife, I was there at the hospital when he died on a Sunday afternoon. Monday morning, she called and said, "Brian, what am I going to do? Am I going to be all right? Can I stay in the house?" All these just some rapid questions. I said, "Let me come over." And I went there. Oh, that day, it was raining that day, and of course, a leak in the roof that day. Just sort of pointing out that her husband wasn't there anymore. But we went through the financial plan, and I said, "This is what we know that was provided. We wrote it all out. This is the plan. This is the insurance we bought. This will come in 2 weeks to help you pay off all the mortgage that's here. You'll have very little bills. We'll have this other money for bills. Then you get to decide what you want to do. You don't have to make any quick decisions."
Right.
And then ultimately a lot of decisions were made. But ultimately that life insurance is designed to deliver death benefit whenever it's needed.
Right.
Hopefully it's not needed until way down the road.
Right.
Now, I think life insurance is extremely valuable, and most people that have family and kids and debt should have life insurance beyond what they get from work.
Right. Yeah, that's another kind of life insurance, that group life insurance, that as long as you're working there, you can have it.
So some tricks of group benefit life is that it's usually done on every 5 years pricing.
Right.
It's a unisex rate normally, which means that females pay extra because you're grouped with the males.
Yep. And men pay less.
Pay less than the female. Well, they pay the same, but they pay less than they should.
Less than they would have just based on being...
But every 5 years it jumps up. And if you look at their chart at 40, 45, 50, it's tough. Now, I got to tell you a worst case scenario, Jeff.
Okay.
All right, a new client comes to me and he talks about his wife who had cancer and passed away.
Okay.
The company plan, the only life insurance they had was group benefit life insurance. And I said, well, what happened with that? And he goes, well, once she got on long-term disability with her cancer, they canceled her.
Oh, no.
On the group benefit. I said, well, didn't you fight for portability and all the other options? I didn't know about that. But it was already too late for us to go back and fix. But the group benefit was tied to the job and disappeared after, in that case, 2 years of long-term disability because she had cancer, which led to her death.
Right.
And that's just a horrible situation of the only life insurance they had on her was through her work.
Yeah, and you mentioned portability. That's just the idea that you have it while you're at work, but when you leave that job, you can port it over to become an individual policy for yourself where you're paying the true premium for it, but at least you get to keep it.
Absolutely. So what we're talking about is this. Do you need life insurance? Now, we believe that there are many cases that you do. And then what we do for a living, Jeff and I as financial advisors, if we sell life insurance as an insurance broker and we shop around for the policies, we do make a commission. But we enjoy helping people decide why they need life insurance, how much they need, and then how to pay for it, and what to design. And design a policy that fits you for the now and fits your family for the future. Life insurance is a love purchase.
Yes.
You love and care for people, and that's why you buy it. So life insurance is something that we can guide you through as part of a good financial plan. This is what we like to do. Let us do the work for you. Don't just call a number and just buy like a commodity something. Make sure you're buying the right amount the right way so it's right there for you. Remember, it will help us make sure it's taken care of for, that it's planned for, and that when something happens, we know that it's been planned for, that you're going to be okay. So at Akers Financial Group, we want you to understand that you can win in your retirement years and you can help your family win if you're not there. So give us a call at 833-WIN-RETIRE and schedule an in-person meeting with one of our team of advisors. That's 833-WIN-RETIRE. That's 833-946-7384, or visit our website, akersfinancialgroup.com, or scroll down to the bottom of our homepage and schedule a meeting right there. Call 833-WIN-RETIRE or go to our website, akersfinancialgroup.com. Why, how, and how much is the question. We will reveal the answer when we come back.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers from Akers Financial Group, and we welcome you back to the Winning in Retirement podcast put on by Akers Financial Group. And we brought Jeff Akers from Akers Financial Group.
Good morning, Brian.
I said that enough. How do you spell Akers, Jeff?
Akers.
Then you have to figure out how to spell financial, which is always hard some days.
That one's in the dictionary.
Yeah, absolutely. So what happens is this. We put on a radio show, and this radio show is something where we design it based on what's going on with our clients, what we're doing day to day with our clients. What we want to do today is answer a simple question. Do you need life insurance? And that's the name of the show. We're here in the second half, and we're here to the core thoughts that we have on life insurance, and that is this. Why, how, and how much is the question. We will reveal the answer.
Ooh.
All right, so Jeff, we'll reveal the answer. All right, so
you want to know
why, how, and how much? What is that about? Can you explain it and help people understand why we think it's important to know those three things when you're doing things?
Well, we need to know why we need life insurance. We've talked a little bit about it before, but there are several reasons. We want to be able to pay final expenses. We need to pay off debt. We might need to replace income. We might want to fund our kids' college if we pass away early. So there's a lot of whys to why you might need.
Yeah, I got more whys.
Yeah.
Whys,
not wives.
Why? Yeah.
There's no V.
Yeah, just one. All right, so one. I can't even say the word why. You got me stuck there. All right, so why? So I use life insurance for charity. I use life insurance for, we give taxable money to charity, and then I do the life insurance through a wealth replacement trust back to the family.
So legacy.
To be tax-free. Legacy is a great idea for life insurance. Life insurance as a way that it could deliver long-term care benefits while you're alive, death benefit when you pass away. It's a combo, expensive internally policy, but for a purpose could be an answer. Life insurance could be a retirement plan if you can't save more at work because you make too much money.
Right.
You got to find another way to save.
Right.
Life insurance could be another way, but the policy has to be designed properly, right?
Yep, it does. Otherwise, you can create some tax problems.
Yeah, so why? Why about life insurance? Do you need life insurance? Well, first of all, why? Who are you responsible for? What are you responsible for? And if you're not here tomorrow, what happens?
And what goals can you achieve with the life insurance that you don't have another way to achieve?
Is it nice? Not nice. Is it generally we're selling like 1 million, 2 million, 5 million, the larger term policies than we've ever had based on incomes and long-term needs, right?
Incomes are higher, home values are higher, so that the value of our life is higher as a result, and that's what we're insuring.
That's inflation, right?
Yes, it is.
Yeah, so you bought term insurance 20 years ago. It's probably not enough if based on wherever you are in your financial plan.
Right, if it's level term.
All right, so we're talking about why. Let's talk about the question about why not. So the show is called Do You Need Life Insurance? So you said the word maybe in the first quarter, but what if the answer is no, you don't need life insurance? And the answer is why you don't need it. What's some reasons people don't need life insurance, Jeff?
Well, you might not need life insurance if you don't have a mortgage. If you've got enough saved that when you pass away, your family's going to be okay.
You're financially independent? Is that what you're trying to say?
Hey, that's the magic word, financial independence.
And that's our goal for every client, is to be financially independent. And then the life insurance absolute need is probably down to zero. Then we have to think of another reason if we need it at all.
Right. And maybe that exists and maybe that doesn't. Maybe it's important to you. Maybe it's not.
Mm-hmm.
So,
all right. So I got to be nosy. Did you buy life insurance before you had kids or after you had kids?
I actually had life insurance right out of college.
Yeah.
I had this pushy cousin that just...
Yeah, a certain advisor had you set up early so you could buy it cheap as a young and healthy one.
Are you going to let me tell my story about that? Is it okay? You've heard it a million times.
I've heard it. Let's let everybody else hear it.
Okay, so I bought it was just a small variable universal life policy. I paid $50 a month for it. And then 10 years later, well, it wasn't 10 years later I got married. I got married about 5 years later. But 10 years after I bought the policy, my wife and I are adopting. It's like, how are we going to pay for this? We got to pay for adopting these kids. And one of the things I could do was take a loan from the life insurance policy to help pay for the adoption.
Yeah.
And then instead of paying a premium after that, I was repaying the loan. Once the loan was paid off, then I went back to paying the premium. So it ended up not costing me any extra. And I had extra money that I could use towards the adoption. So
all tax-free, too.
All tax-free, not even reportable.
Right.
I didn't have to do anything special. Yeah. And so here's something that I bought before I ever knew what the use was going to be. Mm-hmm. And it worked out when the time came. So
yeah. So what happened in that case was a single gentleman named Jeff, and he had extra money. And so we put money in different buckets: money for short term, money for long term, money for medium term. Medium term is money like money for a house, and money that to buy insurance at a younger age, you lock in really cheap prices.
I was much younger and much healthier at the time.
Yeah, you get the super preferred rates. It's cheap, and it's usually you don't think about it because you're super, super healthy, right? But you can buy 30-year term, all these different kind of policies and get it lock in cheap rates. And that's not a bad thing for a younger person to consider. Right.
And I really like the permanent insurance at the younger age because you keep that lower rate all through your life.
Yep.
It's just, at the time, I didn't have a job. So coming up with the $50 a month was a little bit of a, okay, how am I going to do this?
So you were working.
Well, yeah. But I was still getting ready to go back to school. So
yeah, he ended up going back to graduate school and worked a hybrid thing. But so generally, idea when it comes to life insurance, the why is it a part of your long-term plan, or is it part of your short-term plan? Now, what happens is this: life insurance, especially term insurance, I treat like a commodity, and that means if you haven't shopped your term life insurance in the last 10 years, you'd be amazed that even at older age, you could find possibly cheaper now. You're living longer.
Right.
Interest rates are higher than they were 5-10 years ago. Mm-hmm. Sometimes term insurance could be cheaper if you want to shop around.
Right. So it's not a bad idea just to look.
I've had term insurance approved from applying in the morning, approved in the afternoon for a younger couple, a younger person. And they came out and said, hey, do you want more? I mean, seriously. And then I went back to them and said, they're offering more at this really low price per thousand. And they said, let's get some of that. So it fit into the plan. It's a different life insurance industry than when I started back in 1987.
Yes. Back to the phone. The phone has changed since 1987.
Well, the life insurance policies change, and you really need to know what you're buying. Don't just buy because of sales and illustrations. Understand your why. Then you need to understand how much you need. We can do calculations on how much you need, and then how to buy it, like what type of policy. These are all pieces of that. Why, how much should I get, and how to buy it.
And how to pay for it.
Yeah.
Sometimes we have to figure out how's this going to fit in the budget.
Yeah, you were saying you didn't have a job when I got you that policy. I was feeling bad.
Yeah, well, but it's one of those things where you start paying $50 a month. Nowadays, $50 a month, you don't even think about it. But at the time, it was actual money. So
very true. But it became something that you used. And do you still have it today?
I do.
Yeah. And so do I.
And I don't even think about paying $50 a month.
I used mine to buy one of my houses, and then I paid it back. So it's fun.
Yes. So there are a lot of purposes that life insurance can be used for, and some of them, when you buy the policy, you don't even realize what you might end up using it for.
Absolutely. So what happens is this. Life insurance is a purchase that's made a lot of times out of love and caring for your family, and that might be the reason why. Then you have to calculate how much do I really need to provide for them. Now, you might think a little negatively. You might say, hey, I'm not making the next person rich, like the next spouse rich if I'm gone.
The next spouse.
You've heard that, haven't you, from someone?
Oh, yeah.
Yeah.
If I die, she's going to remarry. I don't want to make him rich.
Right. Well, I said, then the comment, then we go back to the beginning, the love part.
Right.
Is there love there? Or what's going on? So the idea of the need of life insurance is based on the providing beyond you. Mm-hmm. Now, you can set up trust. The life insurance can go into a trust for your kids and not for the next spouse to enjoy.
Right.
Yeah.
You
That's not a
can
goal.
Restrict it.
Yeah. So there is handcuffs to a future and estate plan. So when you're thinking about life insurance and wills and estate planning, that all ties into the concept of what if I pass away tomorrow,
right.
And I want to provide for my family and I want them to reach their goals and take care of them. And that is a reason why, and also I call it a love purchase, right?
It is a love purchase. I love my wife, therefore I have life insurance to take care of her if I die.
Mm-hmm. Absolutely. Now, the thing is this, as you outlive the life insurance, term insurance disappears when the term's over, or they jack the prices way up.
Yeah.
Whole life, universal, and variable life, it depends on the design. You got to track them, make sure you're properly funding them for them to last. You got to watch them imploding with not enough premium, make sure you're picking the right investments inside. All kinds of things you got to do, keeping track of that policy.
Yeah, we talked about variable universal life a little bit ago, and in the 90s that was very popular because the stock market was going wild, and so they had really low premiums. And then we got to 2000 and the market crashed, and people started getting letters saying, okay, send us a check because there's not enough cash in the policy.
Yeah, the 2010 was a negative decade for the S&P 500. Mm-hmm. It was made variable universal life difficult because if you lost money, then there's not as much money in there to pay the price and the cost.
The cost of the insurance.
Yeah, a lot of these variable and universal life, the death benefit costs go up every year internally. It costs more and more every year. It's not a flat charge.
Right.
All right, so as we're talking about all these things, we're talking about, do you need life insurance? The fact that do you need life insurance is up to you and your situation. That's financial planning. Right.
We call it a financial fingerprint, and you are unique. Your situation's unique, so we need to figure out your situation.
Yeah, and that takes information. We need to know about your kids because Social Security will pay money to your kids if you pass away. As long as they're still in like school or high school, they'll pay money. So that's part of the plan of what comes in if you passed away too young.
Right. Yeah, you've got to have something to take care of that family.
Absolutely. And as you get older, the kids grow up. You might not need it for them. You might need it for being short on retirement saving. We love retirement saving because we all know the best part of retirement is getting your time back, where you decide how to use it. Before retirement, your time is tied up with other commitments. Mainly your job. A lot of that goes away in retirement. Your time is now consumed by things that you want to do. It's so easy to begin winning in retirement. Go to our website at akersfinancialgroup.com, scroll to the schedule a meeting section, and let us know you'd like to schedule your free consultation with one of our team of advisors. That's akersfinancialgroup.com, or you can call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person meeting. Go to akersfinancialgroup.com or call us at 833-946-7384 to start planning for your retirement now. How do you guarantee a tax-free inheritance to your family? The answer may surprise you. We'll explain in just a moment.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers and Jeff Akers here from Akers Financial Group. We invite you to go to our webpage at akersfinancialgroup.com. How do you spell that, Jeff?
That's Akers again. And financial, you can find that in the dictionary.
Financialgroup.com. Now, Jeff Akers and Brian Akers have been working together for over 25 years.
Wow.
How about that, Jeff?
That's a long time.
I mean, you were younger than I when we started. Now you're so much older.
And you're still older than me, but that's the way it goes.
Yeah, Jeff likes to joke that I'm his cousin. I take it seriously, more seriously than he does.
Well, work is serious. This is something that I started doing because Brian asked me to, and I've grown to love it over the years. So,
Jeff has a master's degree in what, Jeff?
Marriage and family counseling.
Do you ever use that in life insurance sales?
Oh, in life insurance sales specifically, yes. In financial planning in general, all the time.
Yeah, so it's an interesting thing on the education and Jeff's desire to help people. Planning is truly helping people, and we've found that life insurance is the ability at the worst day in a family situation, we can provide the financial help. If we've done the plan, implemented it properly, we can deliver that check at the right time.
Right. When life insurance is useful, it's not because things are great. Somebody just died, passed away, and the family's going through a grieving process at that point. And so if the life insurance can provide one less thing for them to have to worry about, then that's good.
Yeah, so this quarter, we're covering how do you guarantee a tax-free inheritance to your family? And now what we want to do is try to explain how life insurance can do that for you.
So life insurance and tax-free. That sounds amazing.
Well, tax-free is income tax-free. So if you get a life insurance check as a beneficiary, it's going to be income tax-free. That means no federal or state income tax on it.
Okay, that sounds really good. So if I've got $1 million death benefit and I die, my wife gets $1 million.
$1 million, right. Now, how you own it will dictate if it's inside of your estate and have any inheritance tax, anything like that.
Well, estate tax anyway.
Yeah, so estate tax federal has been bumped up to $15 million and made permanent at $15 million. So only above that would there start that 40% federal tax that we used to worry about a lot many years ago.
Right. So for the estate tax, you're thinking about everything you own, your house, your 401ks, your IRAs, all of your investments, and life insurance death benefit.
Absolutely. Now, life insurance in the state of Maryland, if you are giving it to your beneficiaries, your niece and nephew, actually avoids a Maryland inheritance tax because it's life insurance. There's a special exemption in Maryland. That's just a fun fact. Right.
In Maryland, there is an inheritance tax that if, like Brian mentioned, if you're giving to nieces and nephews or just friends of the family or cousins, then there's an inheritance tax, except life insurance death benefit.
Absolutely. So the use of life insurance can really help you accomplish your goals. So the idea of this, a tax-free inheritance to your family. So let's talk about examples of that. So how do I put it? Life insurance is something that can be put into trust.
Yes.
And we can use specialized trusts that are irrevocable. Irrevocable life insurance trust, when the estate limit was a lot lower, we used to do more of these.
Right.
Irrevocable life insurance trust, ILIT is the letters.
Right.
That you put money in, it's like in a lockbox. It's over there in the lockbox.
Right.
For beneficiaries down the road. That's outside of your estate once you fund it properly. And then the estate, there's no estate tax, no income tax. It's a way of getting money set aside to the next generation in a very efficient way. Right.
And so just so you recognize this, you might be the one that's insured in that life insurance policy, but you're not the owner and you're not the trustee of that irrevocable life insurance trust.
I was going to say about the Forbes family. The Forbes family maintained their wealth through the years through properly drawn trusts and life insurance to fully fund each generation to try to avoid that 40% and higher tax where that actually did occur, but the life insurance fully funded the need, giving it back.
Right.
Earlier I mentioned the concept of you can give IRAs and beneficiary be a charity, but then you say, well, I don't want to give all all my savings to the charity. I want my family to have something.
Right.
And then what we do is we replace that wealth with life insurance. And there's trusts that they're for purposes of explaining, we'll call it wealth replacement trusts.
Okay.
Are designed to hold the policy, deliver it to your family, all tax-free, and so that the charity gets it, the life insurance goes to your family, and the only one cut out is whom, Jeff?
Uncle Sam.
Yeah, in that case, right? If it's properly designed, it does take people who are really committed to the family and the charity for that purpose.
Right, and I've done this before where traditional IRAs, that's going to go to charity. Roth IRAs, that's going to go to kids, and life insurance. We actually have a irrevocable life insurance trust set up so that the kids will get money from this life insurance policy, but it'll be spread out over time.
And for those that live in Maryland, we have a federal limit of $15 million, but Maryland's only $5 million.
Right.
And so there's a reason if you're over $5 million of net worth to consider things like this. And having $10 million, if there's spouses, is another thing to think about.
Right. Yeah. So we've got to be. Well, we have to know the rules, and we have to know what we're doing. That's why we're here.
Yeah. So life insurance check. If your uncle gives you a check after he passed away, it's life insurance. It's income tax free. It might be subject to an estate tax or inheritance tax from whatever state he died in.
Yeah. So that's true. That varies.
Yeah. So just something to think about when it comes to life insurance. How do you get guaranteed tax-free inheritance to your family? We just walked you through the basics. It would take an hour and a half probably in a meeting to go through more than basics.
All of the details and specific to your
and
case.
Probably 3 months to implement with lawyers and a team.
It does take time.
Yeah.
There's no getting around that. It does take time.
But it's a great thing to do for your family for the long-term plan.
And once it's done, then you don't have to worry about it.
All right. So as we close up the show for today about do you need life insurance, Jeff, there's this one type of policy that's become very useful, life long-term care. Can you explain it a little bit to me and explain it to everybody about why it's something that people should look into? Yeah.
So, long-term care insurance is expensive to start with just on its own, but life insurance gives you the death benefit. Some policies have this ability, this rider, where you can use your death benefit to pay for long-term care. So one of the complaints about long-term care insurance was always, well, what if I don't need it and now I paid all this money to cover my care and now it's gone and the premium keeps going up? Well, with life insurance long-term care, if you don't use it for long-term care, that death benefit is still there for your family, so it's not lost. And there are policies that have a premium that does not change. And so your long-term care can be covered, or at least part of it covered through this. And at the same time, you're not feeling like you're throwing money away if you don't end up using it.
Yeah. So old school long-term care, there's lots of pricing increases.
Yes.
Like a lot.
Yeah, like companies asking the state for 45%, and the state says, we'll give you 15. They just keep coming back year after year and getting 15.
Yeah, and so that kind of life insurance, I called that health long-term care.
Yes.
And that's not really a viable option anymore.
It's less viable. They've restricted the benefit quite a bit now.
Yeah, it's less viable to a point of no, not for me.
Right.
Sorry.
Right.
So clients, as we get ready to retire, is the time to think about this or prior based on when you're still healthy, because you got to qualify for mortality, life insurance, and morbidity, which is long-term care.
Right.
What does that mean, Jeff?
What, morbidity?
Sure.
Well,
that's a hard word. It's a big word. I can do it if you want me to.
Well, that's going to be things like, do you have something that's going to make you need care?
You're using a cane, a wheelchair. You have osteoporosis. You have other issues right now.
Parkinson's.
And they'll deny you right there.
Dementia.
And they'll deny you. So mortality and morbidity to get a policy means you got to qualify under both in those policies. So if you wait too long, you won't be able to get it.
Right. Now, I said before that I like getting permanent insurance for young people. Mm-hmm. You don't necessarily want to get lifelong term care when you're young because it's more expensive than regular. But you don't want to wait so long that you're not healthy enough to qualify. You have to qualify for it.
I have two cases where I differ from you on that.
Really?
I had two ladies that were later 30s, early 40s, and their concern is they married an older husband.
Okay.
Is they're going to be alone, and that they wanted to be provided for no matter what happens later in life, sick, not sick, all that. And so there are policies that have riders to use the death benefit for things like this. And so for younger people, in those two cases, it was a perfect fit for them.
So you insured them, not their husbands?
Not the husband at all, just them.
Okay.
The husband is going to buy one later, but there's an age difference in marriage. One's 15 years, one's 12. So there's an age gap, and there was this genuine concern on the why. The whole why was, I want insurance in case I'm alone and I have no one to take care of me. Okay. And so we took that worry away at a younger age because they had the ability to save, ability to put money in. We're going to buy life insurance anyway. For a little bit more, we got ones with the riders that allowed for it. So that fit.
Okay.
So it's a little different. So a blanket statement of wait to retirement, I didn't mean to say it that way. What I'm saying is your why could then dictate what you need to buy. So understand that. Do you need life insurance? We think you should think about it. Understand the roles of life insurance. Don't be sold life insurance. Understand your why before you buy.
Right. There has to be a purpose.
Absolutely.
Understand your why before you buy.
Yeah. I wish I had a drum. Understand your why before you buy. That sounds simple, but it makes sense on life insurance. Well, we've had many cases people bought life insurance from a salesperson.
Yeah.
And we say, why?
Right.
And they can't answer us why.
Right. What's the purpose? What are you going to use this for?
Yeah.
And they don't know.
Right. And then the design was wrong. We had to redesign the policy and fix it.
Sometimes that happens.
Oh, it does. Yeah. But the idea is this. Do you need life insurance? Well, this show's been all about that. If you missed any of it, go to our website at akersfinancialgroup.com under the radio podcast tab right there. Listen to our past shows or go to any other podcast place to listen to that. All right. So, Jeffrey, thank you very much for a good show.
My pleasure.
I appreciate it. And we do thank you for listening today. We do look forward to meeting with you. We want you to win in your retirement by taking this opportunity to begin planning with us at Akers Financial Group. To schedule your free meeting with one of our team of advisors, go to our website at akersfinancialgroup.com. Scroll to the schedule meeting section and let us know you'd like to schedule your free meeting right there. That's akersfinancialgroup.com, or you can call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll call you on Monday to schedule your free in-person meeting with one of our team of advisors. Start planning for your retirement now. Go to akersfinancialgroup.com or call us at 833-946-7384. Thank you for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Akers Financial Group offers securities through Archedios Capital, an SIPC and FINRA member firm. Advisory services are provided through Archedios Wealth. Akers Financial Group and Archedios do not share any common ownership. Neither Archedios nor Akers Financial Group provides tax or legal advice. Advice given on winning in retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, and or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment. Examples and scenarios shared are meant to be for illustrative purposes only. Past performance is not indicative of future results.